DOGE underperforms majors as support failure confirms bearish shift. The $0.150 level is now a critical support point, with further declines likely if it is breached. Dogecoin cracked below the $0.152 floor in a high-volume breakdown that erased the previous week's stability, as ETF inflow momentum collapsed and sellers overwhelmed key support zones. The newly launched DOGE ETFs saw their first clear demand shock as inflows plunged from $1.8 million to just $365,420, an 80% single-session collapse. The sharp drop in institutional participation came as broader crypto markets attempted recovery, with Bitcoin retesting $92,000 and high-beta altcoins rebounding sharply. DOGE underperformed the sector by a wide margin. While BNB, Solana, and Avalanche printed multi-percentage gains, DOGE faced persistent distribution pressure, amplified by weak ETF demand and fading speculative flows. Meme coin products, which often show intense initial interest followed by swift cooling, continued that historical pattern as DOGE liquidity thinned at the same moment technical levels failed. The break below $0.152 established a clear shift from consolidation into a defined downtrend. Lower highs, combined with repeated failures to retest the $0.155 zone, created a descending structure that tightened into the early morning session before breaking decisively. Volume confirms the move. A 265M surge, 67% above average, during the breakdown validates a genuine structural failure rather than a low liquidity wick. The 16.6M spike at 2:08 Universal Time coordinated highlights where supply overwhelmed bids, triggering rapid continuation toward the $0.150 psychological threshold. Momentum has now flipped decisively bearish. The trend structure shows clean stair-step declines, and Fibonacci retracement projections between $0.1495 and $0.1478 align with the next liquidity pockets. Indicators show no bullish divergences yet, suggesting sellers maintain control until deeper tests of the lower range are completed. DOGE traded from $0.1548 down to $0.1502 over the session, with the heaviest selling concentrated during early morning hours. The breakdown accelerated precisely as ETF inflow data hit markets, creating a synchronized technical fundamental sell trigger. Attempts to stabilize near $0.151 repeatedly failed, turning that region into immediate overhead resistance. By the end of the session, DOGE drifted sideways above $0.1500, with narrowing ranges and declining volume pointing to temporary exhaustion but no confirmed reversal. The psychological $0.150 level is now the only meaningful near-term support before deeper retracement zones activate. DOGE sits at a fragile juncture. Losing $0.1500 opens the path directly into $0.1495 Fibonacci territory, followed by a heavier liquidity cluster near $0.147. Any recovery attempt must reclaim $0.152 quickly. Without that, momentum remains decisively bearish. ETF inflow disappointment compounds the chart damage. Unless institutional demand returns, technicals will dominate price action. Traders should expect continued correlation with Bitcoin's intraday direction and remain vigilant around volatility spikes, as DOGE remains highly sensitive to liquidity shifts and whale activity.